What's going on, everyone? The market had another crazy day today. No, I'm just kidding. The market barely moved at all. It was a complete chop fest and ended up 0.01% on the day, with 51% of stocks in the S&P 500 actually finishing in the red. And I think this is actually the closest time we've ever gotten to like almost a perfect 50-50 split on the heat map. So in today's video, we're going to talk about what's actually happening in the market right now and where the opportunities are at in a choppy, boring market like we're in right now. So stick with us all the way into the end of the video, because there are opportunities. You just have to trade them in a slightly different way. But with that being said, Tom, let's jump right into it.
Yeah, the overall market was pretty rough today. This morning, we actually saw the SPY jump down quite a bit. There was a lot of tech stocks down this morning. I noticed Nvidia was down a bit. There was some news with Intel that actually sent them down quite a bit too, with Huawei, and they're actually banning the exports of chips there. We'll talk about that in a little while. But looking at the SPY this morning, I mean, there was a pretty big drop, and then the SPY got bought up at open. I will say this, Mike, there was a good opportunity at open with some good momentum to the upside, but besides that, like, the whole rest of the day was just a chop fest, and honestly, that move back up, like you said, we only ended up closing up 0.01%. That is a pretty low percentage on the SPY. It was almost break even. That would have been a pretty funny thing, right? That would have made some good headlines. But either way, Mike, the market just was really flat today, and we noticed a lot of flatness across the board whenever you go look at some of the bigger stocks out there like Amazon, Nvidia, Microsoft, and the others.
Yeah, and some people might be wondering, like, why did the market all of a sudden just die and stop moving? And the reason for that there's multiple reasons, but one of the main things is that as we look at the market, let's say on a daily chart, we can see that it has recovered quite a bit since like the end of April, but at the same time, it is still a little bit off of its record high. So we are in this like weird middle ground where it's like we are not in a panic mode by any means, but at the same time, there is certainly not enough buying pressure to truly lift the market higher past its all-time highs right now. That can change in the future, but we're in this like dead zone, you can say, where there's just the perfect amount of buyers and sellers, and the market isn't budging either way. One thing that's worth noting in today's current market, as we can see on this chart here that shows the Mag 7's percent share of the S&P 500, is that the market is basically controlled more right now than by big tech stocks than it has been in recent years. So if we were to go back to the heat map and look at some stocks like Microsoft or Apple or Nvidia or Amazon or Meta or Google or anything like that, it is those stocks more than anything else that is dictating the current market's movement. So when we go into tomorrow and the rest of the week, and honestly the rest of the year, it is more important than almost any time in recent history to look at these big tech stocks, because they really are running the show.
Yeah, they are, Mike, and we actually have a really good list of a lot of the bigger stocks in the S&P 500 where they're ranking them based on the overall percentage or the impact to the S&P 500, you could say. And what's interesting that I found was interesting, Mike, is Tesla dropped all the way down to 13th now. Man, Exxon and Mobil is putting up more influence on the S&P than Tesla is. That's pretty funny. But the Mag 7 right now consists of mainly Google, Nvidia, Apple, Microsoft, and Meta there. I don't know, Mike, like with Google having two different classes, you could almost count Berkshire up there in the Mag 7 at this point.
Yeah, but either way, keep a very close eye on these big tech stocks in the short term, because they are just so important to watch. But as we look at the market right now, Tom, what would you say are some of the most important levels for SPY heading into tomorrow and even the rest of the week?
Yeah, yesterday I actually said that the 518 resistance was going to be pretty stiff, and it was really hard for the SPY to really get a true breakout above there yesterday, and today it was the same exact thing. It never really got that good momentum up to get a true breakout of those recent highs. So in the short term here, I'm really watching 518 to 518.50 for a short-term resistance tomorrow. Past that, I really like 520. The problem is that right now, and especially I think as you guys noticed over the past couple days, the SPY is like in a chop fest. And the last time SPY was around these levels, it chopped around for a couple weeks. So keep that in mind. I'm not saying that we're going to chop around for a couple weeks now, but there was a lot of chop in between like this 515 to 520 range. So just keep that in mind. But for tomorrow, I will be watching that 518.50 resistance and then 520. For big support, though, I really do like 515. That was the low of pre-market today, and that's been a pretty big level the past couple weeks.
All right, sounds great. Another thing I did want to bring up is kind of the shift we've seen in interest rate expectations. So basically looking at this chart here, we could see that when we started this year, the market was pricing in like almost 7 rate cuts, and now we're all the way down to about 2 rate cuts for the year, and that definitely has a pretty big shift in market sentiment. Think about it this way. When the market first started out this year, everyone was like partying and super happy that the Fed's going to cut rates and the money printers are going to keep on printing. And then now it's like the music's kind of slowing a little bit and people aren't as enthusiastic as they were a couple months ago. And that also has an impact on why the market is slowing down a little bit, because I guess you could say the party's coming to an end. But I like this chart and I definitely wanted to bring it up in tonight's video.
Yeah, and you can see that the market here has been starting to really slow down. I know that we've been showing the chart of the market for quite a while, over the past few months, obviously, and we're always looking at SPY, but it's been very interesting lately to see it starting to fall. And whenever I start to think about the interest rate cuts, one of the big reasons why it was going up, and I know that not all the bulls, but most of the bulls out there were really pushing the fact that those rate cuts were going to happen and that they were going to happen by a certain time. And now that that's changing, the market sentiment's flipping, Mike. That makes a lot of sense, and that's definitely a big reason why the market's moving the way it is. And, the interest rates are so impactful on the market. Of course, bonds and everything else come into play as well. But, to make it nice and simple, we want to see those rate cuts come in sooner rather than later, at least if you want to see the market rise.
And then that's also assuming we could get the war against inflation under control as well. But the next interest rate cut is expected to be on September 18th. But even for that date, it's not fully guaranteed just yet. And in the same way, the market went from expecting 7 rate cuts for the year to now about 2. If it keeps trending the way it is, we might not see any rate cuts at all. So just keep that in mind as well. But Tom, one stock that did have a decent amount of movement today, it surely wasn't SPY, but it was Intel, and it definitely wasn't in a good way either. So what's going on here?
Yeah, it really was, and I kind of hinted at Intel earlier in the video. It ended up down 2.22%. It was actually down a little bit more, but them and Qualcomm actually had some pretty big news today with Biden. Apparently, the Biden administration is blocking exports of Intel and Qualcomm chips to Huawei, which, if you don't know what Huawei is, it's a Chinese cell phone manufacturer. They also make laptops and other products like that. It's kind of like Apple, except obviously not as big. So it is a pretty big company, though. So this is pretty big news. It shows that U.S.-China relations are not necessarily still on the best foot, and that's a big negative here. And I know China stocks took a bit of a dip today as well. I don't know if this was necessarily the main reason why, but they definitely were down a lot this morning as well. So it's not good to see that with Intel, Mike. Like you said, they had a lot of movement, but it definitely wasn't very good. And they had bad earnings the other week. So they're, it's looking pretty bad in the short term for Intel.
Alrighty. I would say, though, like over the past couple months, Intel obviously has sold off quite a bit, and we recently saw the big money play with this one and the CEO buying shares. So it's like, it's not selling off in a horrible way, but if Intel does want to move higher, it's going to have to start to hold some of this ground a lot better.
It really will, and I actually love Intel for the long term, and as it starts to drop here, I'm going to start to become a share, or, I'm going to start buying up shares, and I'm going to also sell some puts down here as well, maybe around like the 25 strike or less. I do like these supports coming up, but I'm going to be really patient because in the short term, there is, obviously a lot of negativity, but it really is good to see the CEO buying shares. That is one of the better signs that we've seen lately. A lot of these CEOs have been selling at the top, so I'm glad that Intel is actually providing us a bit of an opportunity.
There we go. All right. Well, looking at some other stocks that actually had some meaningful movement today, Robinhood reported earnings after the bell, and it's not looking too bad in after hours. So, what is the story with this one?
Yeah, it's looking great. So they actually reported record earnings here. So this is awesome. Record first quarter earnings for Robinhood. The net income was 157 million. They've been seeing a lot of upticks like with their cryptocurrency transactions, which accounted for $126 million in revenue. And their overall revenue was 618 million versus 549 million expected. So they beat there. They beat on the EPS estimate, and they are flying up in after hours, Mike. So that's good to see for Robinhood. Robinhood's taken a lot of flack. I will say, though, they do have that investigation with their cryptocurrency business with the SEC right now. So that's still kind of on the back burner, but it's good to see the stock moving here.
Sounds good. So let's keep a close eye on this one for a potential trade tomorrow. If it does open up tomorrow with a lot of momentum and strong price action, it can bring upon a good opportunity. But at the same time, it'll really have to prove itself in order to, warrant a potential play. But another stock that is moving in after hours is ARM. They reported earnings as well, and it is kind of the exact opposite of Robinhood, where the stock's falling. So again, keep a close eye on this one. But looking at the earnings calendar for tomorrow and the rest of the week, we do have Roblox before open, and then we have MARA after the bell tomorrow. So keep these two on watch, and there's a handful of other ones, but I would definitely say like Roblox and Mara are going to be the most anticipated ones.
Yeah, I really would say that too, Mike. There's a lot of there is some MJ stocks in pre-market tomorrow too, like Sundial, SNDL, and then Kronos, which I'll have an eye on considering all the craziness with the weed stocks lately. But it's weed stocks, guys. Like those earnings can be pretty crazy. I'd rather just buy those and hold them with the prospects of legalization and everything.
All right, well, with that being said, let's jump right into some setups for tomorrow. A stock I'm watching pretty closely right now is KTOS. So there was a big money play on this one about a month ago. They reported earnings, and the stock is moving up in a pretty good way. We could see that the big money entered this one with the 20 strike call options that expire towards the end of July, and the stock is getting closer to breaking above that $20 level, which would make these big money options in the money, which is a great thing. Either way, it is a defense stock, so it kind of moves in its own way, and it also has like some, I guess you could say, upside potential, given all of the wars going on around the world, and especially the increasing tensions in the Middle East. But either way, the stock is finally starting to see some better price action, and it's starting to move with some like respectable momentum. It was up around 6% on the day, which is obviously something that you don't see all the time, and it's certainly a lot bigger than anything the stock has seen over the past couple of months. So either way, I'm watching this one to the upside in a pretty close way, and I'm excited to see how this one does over like the next couple of weeks and honestly the next couple months.
Yeah, it just filled that nice gap there on the daily. I actually really like the way that this one looked today, Mike. And, it was in that chop fest for a while. Like, whenever the big money bought it, it was on April 8th. That was, like, right here where I'm circling, guys, on this green candle. Look at how long it chopped around before finally popping off. This is why it's important to give these stocks the time that they need and to follow the big money here. The big money was like adding to their position too. So I'll definitely keep watching KTOS, Mike. It's a very interesting big money play on a defense stock. With my first play, I'm looking at Wells Fargo, which was a bank. They had some really good moves today. I really like the intraday movement overall, and they are nearing recent resistance. So if they're able to break above like $61.60 to $61.80, then I will go ahead and look at calls. With this one, it's going to be all about momentum, but I will say the momentum was definitely there intraday today. They didn't end up 3%, but it was just very consistent movement.
All right, sounds good. Another stock I'm watching pretty closely is GDX, and it is to the upside. This is a bunch of gold mining stocks all under one ticker, and it has been moving up in a awesome bullish way over the past couple of months, and it's stuck in this like consolidation phase right now, but it is slowly getting closer to the higher end of that range, right around like the $35 to like $35.75 area. Either way, I am bullish on this industry over like the next honestly, it's like probably like the next year to 2 years, so it's more of a longer term thing, but the short term price action is pretty good as well. And we did see a handful of gold mining stocks move to the upside in a decent way over the past week. So either way, I'm watching GDX to the upside in the short term, but as always, we need to see some respectable price action first. It's not like something that you just blindly jump into and, the stock magically goes up. It's more so if the stock puts good pressure on the high of day, gold mining stocks are increasing, maybe gold prices are increasing, and just the price action and momentum surrounding the stock is good. That's what would really offer the opportunity with a setup like this one.
Yeah, and I really like GDX, like, over the longer term. Like you said, a lot of times these swings on GDX and etc. can do pretty good on, like, those metals type of stocks. So I'll definitely keep it on the radar. With my next play, I'm looking at Pfizer, Mike. Pfizer was pretty crazy today. They had a good recovery back up into resistance, and I'm looking for a breakout above some key levels here, like 28.35 to 28.50. If we see good momentum and good pressure on the high of day, this could be awesome. And whenever we switch over to Bookmap, there's a lot of sellers overhead in between, like that 28.40 to 28.60 resistance. So I'm definitely going to watch for those sellers. If we start to break through there, then I will look for more momentum up. But make sure that you see the breakout and you see that constant pressure on the high of day. Don't just buy in the morning and then say, well, Tom said to buy it. That's not that's not how these plays go. And Mike does a great job at explaining that with his too. So definitely, don't over leverage, guys. Be careful with them. But that's what I'm looking at for the breakout. And of course, shout out to Bookmap here for identifying these nice levels for us.
There we go. All right, well, it's now about that time for today's momentum plays. And with the first one, we have UPS to the upside.
UPS, yeah, pretty good movement today. A lot of these small, or I should say slower moving stocks did pretty well. If it can break above 148, then I have calls.
All right, with the next one, we have Coinbase to the downside.
COIN, yeah, pretty bad movement here in the short term. If they break under 208, then look at puts.
And with the last one, we have SMH for both directions. And for those of you who don't know, SMH is a bunch of chip stocks all under one ticker.
Yeah, and they've been consolidating quite a bit lately, so I'm going to go ahead and look for a breakout above 222. That's a pretty good resistance here in the short term. If they end up falling down under 219.40, then I up the puts.
All right, so we have the downside level for puts, and we have the upside level for calls for SMH. Don't forget about the downside level for Coinbase, and then the upside level for UPS. Either way, we are watching these three stocks for potential day trades tomorrow, if and only if they break through the levels Tom listed, and then we want them to continue in those directions. The stronger the price action, the more consistent the pressure or consistency of the price action, the better the setup becomes. So keep a close eye on these ones. And let's jump right into today's $760,000 big money trade of the day. And we are looking at ticker symbol SQ. So the big money put around $760,000 into the SQ $87.50 strike call options that expire on January 17th of 2025. As we look at SQ on a more broad view, you can say, if we zoom out to maybe a weekly chart or a daily chart, we can see that the stock has been consolidating in this $50 to $90 range for almost 2 years now. And assuming the big money is buying these call options, they would be betting on the stock finally breaking out of this range. Square has been holding up in a fine way over the past couple of months, but at the same time, it has a lot more work to do if it truly does want to break out and, make some new recent highs. So the setup's not bad, but I will say this is it's not my favorite big money play, mainly due to the strike price and expiration. The $87.50 strike is pretty far out of the money, where it increases the risk that this trade is a covered call. And the expiration is good, but, just given that strike price, it just makes it a little bit more risky than usual. So keep a close eye on it.
Yeah, it really does. That strike is like right around the top of this range. So I'm really kind of worried about that. But I really do like the setup with Square. I think really it's just giving it the time that it needs. Square could keep chopping around in this zone for a little bit longer before finally truly, getting some good news, maybe on their next earnings report in August or something like that. A better reason to maybe start to get a good breakout and a good trend going. But I do like the setup overall, Mike. And in the short term here, there's been pretty good support around this 65 to 66 support. So I'm definitely going to keep watching that. And it just filled a good gap to the downside. So it's kind of an interesting one in the short term, Mike. Like, it's been kind of stuck, but I really do like Square for the longer term with shares. And I will say, given that this one has a lot of time, I would almost just lean towards shares anyways at this point.
No doubt. So either way, we'll keep a close eye on this one over the next couple of weeks and months. But looking at the market right now, like we touched on earlier, we're in a weird dynamic where the market is far from free fall, and at the same time, it's getting closer to its all-time high. But what is really lacking more than anything else is momentum. There's like the perfect amount of buyers and sellers where the market's just pretty stagnant. In this market environment, it is more important than almost ever before to trade in a smart way. And what that means more specifically is, as we look at, let's say, the heat map for today, you can see that it was pretty gray. There weren't too many moves to the upside or the downside, and around 51% of stocks in the market were red. That's like there's very little opportunity in that situation. So there's no need to trade very heavily right now, and there's not really a need, like if there's no movement, to trade at all. If you don't see any opportunities, don't just trade out of boredom. You want to make sure that there's a real opportunity before you just jump into a play. So I just want to throw this out there to make sure everyone could navigate this chop in the smartest way possible. But the good news is that choppy situations like this normally don't last too often. Really, you just need like some sort of movement to kind of start the process back up. So for example, if we see some stock, whether it be off of an earnings report or some news event or even no event, start to move to the upside, that can kind of start that upside chain reaction again and get the, I guess you could say, stocks flowing like they were a couple weeks ago. And of course, the same works to the downside. But either way, let's continue to navigate this market in a smart, strategic way with long-term, good, sustainable trading habits. And this would actually be a perfect time to mention our brand new Stocked Up Deep Value Club. Basically, this club tells you everything that you need to know about what actually drives stock prices over long periods of time. And, of course, as we all know with short-term trading, it's cool to look at news and recent earnings and, any sort of technical indicator. But at the end of the day, what's ultimately going to drive a stock over the long term is how much money the company's making, its future profit expectations, and what's actually happening at the company, right? Now the thing is, you can't just look at any company and say, okay, this company's good, so that means it's an automatic buy. Because anyone who did that over the past couple of years has taken quite the hit, to say the least. So basically, in this club, we break down how to actually look at companies and tell if they're worth buying or not. We made it affordable to everyone at $30 a month, and you are guaranteed to learn a whole lot by joining this. So consider joining. It's brand new, and it's the best $30 you can spend, especially if you're, don't know anything about the fundamentals of the market. But besides that, thank you all so much for watching. And before we close out, let's give a giant shout out to today's member of the day, Lawrence, in the Stocked Up trading floor. You've been in the group for quite some time now, and you had a pretty good trade with Uber today, so we wanted to give you a great shout out there. But that is about it for tonight's video. Thank you all so much for watching, and let's end the rest of this week on a green note.